Here we go again. The uncertainty in Greece is weighing heavily on the markets. That's to account for today's loss, and we want to try to sort this out for you. Clark Hodges is joining us from Hodges Capital with more on this. So I said it, here we go again. The market's uncertainty some 5 weeks ago was based on questions about whether Greece would be able to deal with the debt. We thought a solution was on the way, and now today it looks like that's in question.
Right. The Prime Minister has indicated he's going to put it out for a vote, and that's the uncertainty the market doesn't like. What if it doesn't pass what the market rallied on last week?
Let's assuming it doesn't pass. The losses we're seeing today, is that accounting for that? Has the market factored that in, or are we going to see an even greater drop?
I'd say you'd have a chance of a greater drop given the fact that it doesn't pass. The uncertainty is setting it down today, so you could have a pullback from that.
All right, so from Wall Street to Main Street, what's the average investor to do? We thought that European banks were going to write down their debt by 50%. So if a U.S. bank has a holding in a European bank, they would have been safer than they otherwise would be. What should you do if you're holding bank stocks, U.S. bank stocks?
Get on board for some volatility and some scary times, because bank stocks have not disclosed what kind of government debt of European countries did they own.
Right, the banks haven't disclosed on their books.
So I'd get out of all those kinds of things.
Let's talk about specifically this swing in the market. We put this in context the last time. Unlike 10 years ago, a 300 or 400 point drop isn't what it used to be, because we have day traders now who are amplifying the market both in gains and in losses, correct?
Right. You've got to invest in the market knowing that the volatility is going to be there. The day traders, the computer traders, the ETFs, these big baskets of stock are just bought on days when it's up, and they're sold on days when it's down. That's a catalyst for a lot of volatility that wasn't there 10, 20 years ago.
All right, so stay in the market long term, but hedge your bets on U.S. banks and watch this very closely. All right, thank you, Clark. Much appreciated. Clark Hodges from Hodges Capital.